Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to the bigger picture. And it has been quite a week with all the news around tariffs back and forth, but markets are still chugging along. We've got the Wall Street numbers overnight with the S&P 500 are now on a 3-day winning streak. Looking at what we have across Asia right now, a bit of headwinds as investors get a bit more nervous to figure out what to expect in the coming days. We've got Sean Teo. He is the sales trader at Saxo, Singapore. Good morning, Sean. How are you doing today?
Good morning, Ryan. Happy Friday. I'm doing great. I hope you are having a great morning.
Yeah, happy Friday. So far, so good on my end. And looking at what markets are doing, we've got a bit of I think, nervousness or at least some caution playing out right now as they try to figure out what to digest when it comes to the tariffs as well as some of the data. So looking at some of the data that we have on tap, walk us through what you're looking out for.
Okay, so tonight we will be having the U.S. non-farm payrolls. I think markets will be looking at this for this week. I think this week is one of the bigger points. So this will actually indicate the labor market in the U.S. So we are expecting 170,000 new jobs for the non-farm payrolls, but this is a figure that's down from the last one in December, which was 256,000. Any figures that actually come below this would generally be a good sign in terms of like any rate cuts in future. So a softening labor market would generally also put lesser price pressures on the market. So generally, you would want to see a softening labor market and also prices start to come down in tandem to see any more or at least more rate cuts in 2025. Yeah. So also actually that's the next one that also comes in together with the non-farm payrolls would be the unemployment rate. So unemployment rate, we are expecting to see the same number at 4.1%. So if we do see anything above 4.1, then that would also help the rate cut environment. Apart from that, we will also have to look at the change in the hourly earnings. So, of course, if this number also still continues to pick up, then that will also actually put some signs for the inflationary pressures.
Yep, hotter than expected numbers could mean higher for longer. All right, let's take a look at what's on the table next week when it comes to earnings. And we've got DBS back home reporting fourth quarter numbers. What are you expecting on the front?
So I think for DBS, pretty much super popular stock in the Singapore environment. I think a lot of analysts are still expecting a strong performance for DBS. Just a brief return of like how they've been performing for the past 1 year. I think they've had a pretty stellar performance. Their 1 year return has been actually above like 50%, like including like dividends, right? That will actually push them above 60%, which has actually beat the S&P 500 by a fair margin. So not just like the DBS, but a trio of local banks. They've actually been also beating their earnings pretty consistently over the past 2 years or so. So the net profit is still expected to be to actually increase year on year by 12%. However, this would actually be a decline of 16% quarter on quarter. But this is to be expected due to the fact of that since the rates will actually be lower, their net income would actually also be lower. Income is also actually still expected to grow for them by 6.7% year on year, but a smaller decline of 7.1% quarter on quarter. Another thing to note is that a lot of analysts are also actually forecasting for DBS to actually increase their dividend by 6 cents to 60 cents, and not surprisingly also, we could also see that DBS from time to time, they also do give a special dividend, and including the buybacks that they actually performed last year. So any of these that actually do happen would actually show signs that DBS still maintains fundamentally strong.
Yeah, steady gains over the past year, as you pointed out, up 50+%, and that's now trading at around $44 plus. All right, take a look at the other earnings on the table. We have McDonald's. I suppose China will be part of the story here.
Okay, so regarding McDonald's, I would say this is a pretty safe stock, but I think unfortunately not many investors actually have this one on their watch list for now. Their 1 year return I've seen that actually is just up like about 1.5%. They do give a rough dividend of about 2.5%. So one thing to note for McDonald's is that their expected earnings is actually expected to have a decline of about 4% year over year. So if you do see any beats for their earnings for McDonald's, then this one I think could be positive for the stock. Revenue, though, the expected revenue expected to be actually slightly higher, but earnings are actually expected to be down slightly. So this is actually due to the increasing wages and costs that pretty much affecting a lot of companies so far, the rising labor costs, especially in the US due to wage hikes and commodity expenses. And not forgetting, recently we also did have E. coli breakout due to the contaminated onions that McDonald's had. So these headwinds that McDonald's has, it's pretty much things that investors will need to look out for, these increasing costs and wages, and also not forgetting E. coli breakout that they had. So we'll need to see how McDonald's actually managed to balance the cost pressures with their profitable growth.
All right, that is going to be on the radar for McDonald's. Also on the table is Shopify, which is a reflection of the e-commerce space. What is the appetite for shopping these days online?
Okay, so Shopify, right? I realize that Shopify, I'll say, a relatively unique stock in the space of e-commerce. So Shopify is actually the third largest e-commerce stock of Amazon and Alibaba. But the thing is, Shopify by itself, they don't really carry any products. What they actually do is provide the platform to sellers to actually sell their products. But in this aspect, they are actually now also the third biggest stock in the e-commerce space. So one thing for Shopify is that their outlook seems to be pretty positive. There's analysts that expecting a 41% compounded annual growth rate in their operating income over the next 5 years or so, which this actually outpaces a lot of their competitors. However, one thing to note is that Shopify's valuation, for what I've seen, their forward PE is quite a fair bit higher than their competitors, which are actually averaging roughly about 35. So this high valuation for Shopify, right, could actually make this stock kind of vulnerable if their earnings disappoint in any way. So I think this is actually one key thing to look out for, since a lot of analysts are expecting a strong performance, but if their earnings or guidance don't deliver, then we could see some volatility in the stock.
Yeah, another stock that is being looked at very closely in the chip space is Super Microcomputer, and this as it's looking to report earnings next week. How much momentum is there going behind Super Microcomputer?
I think relative-wise, I think Supermicro, it's been relatively volatile, but in the case, this volatility is quite normal, I would say. They've been trading plus minus about 8 to 10% day to day, but that's a pretty much say natural, given the volatility actually started to increase after their auditor resigned. So this point would probably be the most key for Super Microcomputer. The last earnings report that they had was actually last year, August. And for this year, we are actually expecting earnings of 75 cents per share. So the previous one was actually about 35 cents, I believe. And so this earnings for Supermicro will also actually be regarding the demand for the overall AI infrastructure and data centers, also not forgetting NVIDIA. But the most key one, I would think, would actually be them addressing their financial reporting compliance issues. If they do come out and investors do realize that their financial reporting, everything is all sound, and they also have beaten their earnings, I think this stock could be in for quite a big move.
A bunch of stocks to watch out for: Shopify, Super Microcomputer, McDonald's, and DBS reporting earnings next week. We have been in conversation with Sean Teo. He's a sales trader at Saxo Singapore. Sean, thanks for your time, and have a great weekend in advance.
Thank you so much, Ryan. Have a great weekend ahead.
All right, catch up again soon. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.